All right, welcome to the Risk Rundown. So excited to have my colleagues with us. Steve Glick, our resident life insurance expert. Welcome to our episode. And Tyler Banks, my wonderful co-pilot.
Let's go.
Thanks for having me.
We are so excited to have you. And we are going to be talking today about life insurance and the different reasons for it, the different ways that we can approach it, and kind of just pick your brain about different scenarios and different ways that we've been able to help clients along the way. So, Tyler, you have any wise wisdom to share with us at the beginning here?
Always. So, Steve, life insurance is one of those things. It's like need to have versus would like to have, right? On the property and casualty side, everyone has a need for a home and auto policy. Life insurance is one of those things that's get thrown into the insurance bucket, not understanding that it is wide and vast in how it's used for our clients, and something that we obviously need to have a conversation about. Because I think a lot of clients are confused about life insurance. Do I need it? Do I want it? When is it appropriate to integrate life insurance into a larger, trust and estate plan? So this is going to be a very thoughtful conversation, Steve. I'm looking forward to it.
All right. Well, thanks for having me on. And so the types of conversations that I have about life insurance are really pretty varied from day to day because of the types of clients that we have. So within private client, I would say that I'm having conversations that range from the young family who's having a child and they're now thinking about life insurance to more advanced discussions around the use of life insurance or estate planning. I think that the overarching feeling about life insurance is that people want to have as little of it as they can get away with for the shortest period of time. And they want to pay the least for it because they see it as a commodity. And, with my nearly 30 years of experience doing this, over the time, I see it less and less as a commodity.
But also, I think that it's sometimes like a trigger event, right? Like you said, it's either someone starting a family, selling a bit, or thinking about, transferring a business into another ownership, or there can be some trigger events, right?
I think that as things change, whether it's, having a child or going through a divorce, we have conversations like that, or entering into a different business arrangement or entering into retirement. These things do need to be reviewed at those times because your situation changes. And so your needs may change as well.
My trigger event, honestly, just recently, and Steve, you and I worked together on this, was both my kids were out of the house, right? Both my kids are out of the house. They're now off on their own. They're both married. And so now my husband and I will really start talking about the trust and estate and how are we going to be setting up our children and grandchildren for the next generation, right? So that was our trigger event, was not having a baby, but getting them out of the house.
Exactly. It is interesting because I've been doing it long enough that people that bought term insurance policies that were supposed to last until their kids graduated college, usually, they're now over with. And I will get calls all the time saying, I think I still need life insurance. And so that kind of brings me to a story that I recently had with somebody who was in this sort of young child scenario. And they said, we probably just need insurance for 10 years. So in his mind, he'll have enough money to self-insure, which is something that comes up with our clients all the time. Am I going to self-insure? And so I said, I think you should look at the cost before you decide to self-insure. But I think the self-insurance question is one that, you see sort of throughout that life cycles. People start sort of what I was saying earlier about, wanting the least amount and wanting it for a shorter period of time. There's just this knee-jerk reaction that I don't really want this product, although it makes so much sense from a planning and risk management perspective. I find myself having to convince people sometimes that maybe they should look at it in a different way.
So we talk about, again, those personal life events, but from a business perspective, they also have, life events as well. Whether they're going to recapitalize, whether they're going to be bringing in private equity, succession planning. These are significant things that companies and businesses and organizations need to be aware of. Are there other things that should trigger a conversation for, businesses and companies and leaders of those organizations?
Yeah, I think in general, I think it's a review sort of a situation, because what happens with a young business is they tend not to really look at it. So it's again kind of a life cycle. They're building a business, they have an idea, they're maybe they put together a corporate entity, and now they're just hitting the ground running. They're not thinking about what the financial ramifications are going to be of a death or a disability of an owner. And then the business starts to mature and become more successful. And somebody, sometimes it's the CFO, sometimes it's us, coming in and saying, have you addressed what would happen if you lost a key person? And if one of those key people was an owner, what would the effect be? Because sometimes, I would say commonly, the operating agreement will call for the buyout of a deceased or disabled business owner. So there's really an obligation that's built into the agreement to begin with, but nobody's necessarily gone backwards to say, okay, can we buy insurance against that? And so we'll come in and we'll look at, what the value of the business is and, what the appropriate level of coverage is and what that might cost them. And it becomes even more interesting when it's a single person owned entity, because a lot of times what happens to the business if you're not here, or are we really just talking about protecting your family?
Because, honestly, there might be a lot of businesses that the next generation doesn't want to take over the business, right? So it might be a key person that has been working there for years and years and years that wants to take over the business. And all of that stuff probably should be, written out and discussed before something were to happen.
So Steve, you bring up, a lot about ownership of, these businesses. Now, Keyman isn't pigeonholed just to, ownership and executives, but could also be used for, let's say, a top scientist or a top engineer or a top salesperson within the organization that they're really dependent on that skill set for their success. So, have you used Keyman, life insurance in situations where it's not necessarily an ownership, but more of just a key person within the organization that they need in order to function and run at the level that they are?
Absolutely, because there are many of the things that you described. There are sometimes people that just have such a specific knowledge base or skill set that it's just not easy to replicate. It could be relationships with a major vendor that the firm feels if that person wasn't here any longer, that may not continue, and it could make up a large percentage of revenue for the business. It could be somebody that has a skill that's so specific. Doctors, for example. I worked on a scenario one time with a doctor who was very, very well known for a specific type of a procedure and wound up bringing in investors. And they knew that without that person, their revenue would change for the company. Today you have, AI, you have blockchain, and there are really limited numbers of people that can do certain types of programming. So you could be tied into somebody who's running a team for you who you just cannot go out and find a replacement very easily, and it's going to throw you off. So there's lots and lots of different specific examples, but those are just some that I've seen personally.
Steve, let me ask you a real life question here. My guess is that a lot of times when having conversations with individuals, they're probably saying something to the effect of, I already have a term life insurance policy that is sponsored by my company, so I'm well covered. Would you mind just touching on maybe some of the limitations of a company-sponsored term life insurance product versus, something more broad that having a conversation with you can provide?
So with group life insurance, what your employer provides to you, there's a couple of things. I guess number one is if you're not healthy, this is a great benefit, right? Because you wouldn't be able to go out and buy it anyway. If you are healthy, if we look at the pricing table of the group plan, you could probably own the policy for less money over 10, 15, or 20 years by a long shot, because group plans have an increasing benefit, an increasing pricing. So every 5 years of age bands, your price goes up. So if we look at what that increase would be, we can normally find policies that are a lot less expensive. The one piece that's troubling from a planning perspective is if you have a change in health and you have to part service from that employer, will the policy go with you? Meaning, you're working for a company and you have a major change in health, you're no longer able to continue working. Maybe you want to go on disability. So in order to be on disability, you have to part service at some point. And so in most cases, those life insurance policies don't come with you. They're not portable, is the term. And you're essentially leaving a life insurance program behind. So when I do planning, I always push that to the side as a non-element. If it's there, it's there. If not, we need to own this insurance on our own.
We've talked about a lot of different scenarios and different types of policies and stuff. I do kind of want to just Tyler, you and I, we're going to just kind of just say a statement to Steve, and he's going to say yes or no if it's true or false. So just a quick 4 or 5 questions. And Steve, you're going to just say true or false, no explanation, just
True or false.
Yes or no. All right. So I am young and healthy and I am good to go. I really don't need life insurance. No gray area. You got to say true or false.
False.
All right, Tyler, go.
So I'm an individual that is looking to put money into an estate plan that is not going to be taxed. Is life insurance used in that function?
True. Yes.
My kids are taking over my business. I got it in my will. I'm good.
False.
Last one, Tyler.
So in a divorce situation, I have a life insurance policy. Post-divorce, is that life insurance policy still going to cover me and my family, or is that something that needs to be revisited?
True. It'll still cover your family.
Okay, so I just have a quick question. If you were to choose one life event that anyone and everyone should come to you to discuss, what life event would that be?
I would say that the life event is when you're starting a family. And I would even add that a lot of times people know that, or they're thinking that they should have life insurance, but they don't address it right away. And in thinking about that aspect and why, I find myself encouraging people to do this before the baby comes. And a lot of times they don't take my advice on it, because I'm basically saying, when this baby comes, you're not going to sleep and you're not going to find the time to go back and address this.
And Steve, with teenagers, you still don't sleep.
All right. Well, I just want to thank both of you guys for joining me today. Tyler, I will see you next time. But Steve, thank you so much for your time today and giving us a little words of wisdom for life insurance. And as always, stay safe and stay protected. See you next time.
Thanks, Steve. Thanks, Julie.
Thank you.
Thanks.